Welcome to the Foreclosure Freedom Network show. I've been in the mortgage industry for 20 years, and I'm a licensed California realtor and certified loss mitigation consultant, which means I've learned the ropes of mediating between the homeowner and lender and hope to help every homeowner understand this crisis better and what the remedies may be for you if you're in trouble on your loan. Each segment is 10 minutes long. You can go to my website where you can download the entire series of videos. They're for your use. I'm very happy to be here today, and I'll be going over a bit about the new Homeowner Affordability and Stability Plan. This segment of Obama's plan won't help everyone, but it is designed to assist about 3 to 4 million with their mortgages, the ones that have Freddie Mac and Fannie Mae loans. Those without these can be helped with the Home Affordability Modification Plan, which is a different plan that will come out later in a different video. Who's not assisted in any plan yet are income property investors. However, many of these individuals are being helped by loan servicers anyway, so don't be shy. Whoever you are, if the numbers aren't adding up and you want a modification or you want to sell your property and get out from underneath the burden, help is possible, and many can soon have better days. When looking at the entire nation in the last quarter of '08 through the present, California, Nevada, Arizona, Michigan, Virginia, D.C., Maryland, Georgia, and Florida are deemed the worst. And of these, California and Florida beat the cake, particularly San Bernardino and Riverside. Some predict an end to this decline to be sometime in 2010. But keep in mind that until all of the toxic loans are flushed through the system, we will continue to see hardships when and if the interest rates rise on adjustable rates mortgages, and it's a given that anyone with a negative amortized mortgage will have to try to negotiate this before too long. The good news is that many realtors across the nation are reporting multiple bids on their listed short sale properties, and bid wars are starting to happen on these, increasing offers of up to 10% or more of the listed prices. Part of this current trend is because many of the properties that were flooding into the market are now either marked pending or are sold because of all of the moratoriums inspired by this stimulus plan. New foreclosures aren't as plentiful, but also there are incentives tax-wise for buying a new property for a homeowner, for a new homeowner rather. So there's quite a few of those looking. So if lenders can keep these strategic plans in line for a more conservative handling of this crisis, with the new plans that have just been released, and continue to work diligently to keep people in their homes where possible, perhaps we'll have a more orderly fire drill the next time we have one. Now let's look at the more immediate history and analyze the market a bit to see what some of the contributing factors were to this crisis. First of all, real estate was appreciating steadily 1995 through 2005. And then in 2006, very people noticed the appreciation falling from 9.4% to 3.8%. This was a trigger that did wake up some, because it was the lowest real estate appreciation in about a decade. And that was the signal at that point to escape from the game. But many were too hopeful that this was a false alarm. Some sly dogs at that point started to play games at this point with condominium conversions from apartment complexes or hotels, doing virtually nothing but recording condominium documents with the counties and coming up with promotional action plans and verbal promises of upgrades, but no mention of these in the official documents reviewed by appraisers, underwriters, etc. And some of these developers didn't even bother to properly convert these, and it left the new owners with partial ownership in an apartment building rather than even having a condominium. So, what all of this did with the wild promises of upgrades, verbally made, not put into the documents, we had a spike in purchase prices because of this kind of fraud. Underwriting writers were believing this uh, market was continuing uphill, and the people were left with a hot potato and a serious loss or just pure fraud. Developers weren't the only one playing the game of fraud in '06 and '07. And this was because there were many people playing in this fraud game, and they missed these glaring signals. Many people wanted to get a piece of the action, and they believed these fraudsters to begin with, and they didn't even read the final closing documents and challenge the lack of documentation on the many verbal promises. Also, many developers promised cash at closing, and they guaranteed rents for months or a year or two. Some developers hooked their prey by sharing some of the wealth in this way, even though they did very little or nothing in the condo conversion, and promised the moon verbally but not in writing, except for this guarantee of rents. Now, let's face it, historically speaking, when there's a market collapse like this, it's preceded and added to by fraud, deceit, carpetbaggers, Ponzi schemers, and all manner of assorted scoundrels. And don't think for a minute that these are only the lowly creatures at the bottom of the barrel. No, it was all the way up the line. By now, you all know the scope of the deception on all levels of the playing field. In 2007, we averaged minus 0.7% in appreciated assets, and it was weighted far more heavily in the last quarter of '07. And at this point, there was the beginning of hysteria amongst lenders who were very concerned and convinced that subprime products were going to become a catastrophe. Yet most lenders at this point were barely giving lip service to loan modifications, and they were refusing to approve short sales without a counteroffer far higher than the current market value at that time. If you flood any market with more supply than demand, what do prices do? If you have 50% of all current loans with subprime borrowers, with oddball mortgage products such as 2 years of interest only at 2%, and then the remaining 20 years at 3 to 4 points above LIBOR index, then you've got a crazy situation. Or reverse mortgages are even crazier. What do you think is going to happen once the adjustable rate mortgages reset? If you misroute or hang up on orders as a servicers, when these homeowners are calling in for help, or if your collections department harasses them and threatens them with foreclosures should they not submit a payment within 3 days, and they do this 2 or 3 times in a row, do you expect them to keep trying to call? So, now, the other things I want to go over here today is 1995 to 2005 was a period of time when the whole market was being stimulated in order to create more affordable housing for people. Certain acts that were made in the Depression times were canceled at that point in time or amended in order to have affordable homes become a precedent. And because of this, a lot of the upswing in the market that happened here, you can see happened, and this is right around that 95 period of time. So truly, no one can say, well, it's all one person's fault or the other. All the way down to the government, Fannie Mae, Freddie Mac, the feds, everybody was involved, and everybody is responsible. And if each one of us take 100% responsibility, we'll be in pretty good shape. Thank you, and look for the next show.